Hello everybody, I'm John, this is JP Strategic Investments, and today we're going to talk about Uber stock and really how much farther it can go because it's been beaten down pretty heavily over the last few months and it's really, to me, looking like it can't go much further. So we're going to dive into some technical analysis here that I have in front of me, and then we'll get into some valuation metrics and things like that and really talk about how much lower it can go and where it might bottom, where I might be buying shares, selling puts, things like that. So let's just dive right into it here. First thing I want to go over just kind of the major technical things. As you can see, over the past several months, pretty much since May or so, Uber has pretty much been on a downturn. In April or so, the stock is up in the high 50s, low 60s, and it's just basically continued to slowly drop since then. And now it's really testing this $30 support level. And this is a pretty strong support level. You can see pretty much since IPO, that has been a pretty strong support level here. We do have kind of the next, if it were to drop through this, which it kind of has, but it's hanging out there. If it were to drop through this, the next major support level is pretty much around the $27 mark or so. And then really it kind of gets down in around the $20 level. If it were to drop through that $27 level, there's really nothing from a technical perspective that's supporting it all the way down to 20. Now, that doesn't mean it's going to drop all the way down there, or it's going to even drop all the way down to the $27 level, and that's where we kind of get into some of the more fundamental analysis and the valuation there. Now, as far as the valuation, as far as the metrics that we're looking at, like PE, price to sales, price to book, things like that, as far as a PE, Uber technically isn't quite profitable. We'll get to that in just a second here. As far as a price to sales go, they have a pretty low price to sales, around 3.3 there, especially when you consider the way that revenue has been growing for Uber. It's just growing at an enormous pace. The other thing here, and this to me is really the main thing I'm looking at, the price to book is under 4. Now, the way that you get a price to book ratio here is you take all of the assets of the company, the cash, the property, anything that they have as an asset. You subtract from that any of the liabilities, so debt, any money that they still have to pay, any material or products that they still have to deliver, things like that. So you take all of the assets, subtract all of the liabilities, and then you compare the market cap of the company to that number you get, basically the net asset value. So it's market cap divided by net asset value. And basically what this is trying to tell you here is right now, Uber is trading at about 4 times its total net asset value. Meaning if you basically just sold the company for the cash and the property that it owns, just that, not the business that it's built, not the opportunities that it would give you. If you were to just price the business as far as the assets that it has, it's only trading at 4 times that value right now. And to put that into perspective, from Investopedia here, we have a line here that says value investors often consider stocks with a price to book under 3. Now, value investors, remember, if you're value investing, you're really looking at companies that aren't really strong growth companies. You're more looking at slow, steady companies that have just become undervalued. We're getting to a point now where value investors might actually be looking to dip their toes into Uber stock, let alone growth investors and things like that. I mean, really most of the people in Uber stock at the moment are looking for the growth, right? That's why you're investing in Uber if you're investing in Uber. You're not looking at it from a value standpoint. But to be honest, if it continues to go down, we could get even value investors jumping into Uber stock as a result of this price to book ratio, which is basically a testament to their cash and investments. Uber has a great strategy where they have a ton of cash, very little debt, and they also have a ton of minority investments. If they go into a market, say China, they did this, where they really don't see themselves easily becoming number one, or it's going to take too much time, too much money, too much resources. They sell their business in that area to whoever is kind of their main competitor who is looking like they're going to be number one for a minority stake in their business. So Uber essentially lets go of their business there in exchange for a stake in the company who they think is going to be number one. If that company does well, Uber's investment in that company does well. And for the most part, they've done well. They've had a couple, DD was one where, because of regulatory issues and things like that, but for the most part, those investments are also doing very well for the business. And this price to book ratio is honestly getting to a point where it's a little ridiculous. So that is what I will be definitely looking at over the next month or so to see what happens, especially if Uber continues to drop. And really the main thing holding this business back right now is technically it's not profitable. And so if we look at just the past 4 quarters here, you can see they've been really steadily growing revenue and profits. They just had that bad Q3 there. And again, that's a result of their investment in another company who's having regulatory issues in China. To be honest, that may be worked out and all of a sudden that flips right back the other way and they make all of that money back. But it's really something that's not related to Uber's core business. And so if you look at this, pretty much all they would have to do in the next quarter is make anywhere around 500 million or so in profit, and they would technically have a net profit over the last 4 quarters that would give them a trailing PE ratio. And really what all of these algorithms are looking at right now, if you look at algorithmic trading, if you look at kind of what institutions are really looking for in the current environment with interest rates, with inflation, one of the main things that they're looking for is profitability. The other main things that they're looking for are a lot of cash on the balance sheet, a good cash position, and a solid business model. Uber has those last two. They're really just missing that profitability. And to be honest, I think they're not that far away from that. If we look at some of the guidance that they're giving here, you can see that their current consensus estimates are actually ahead of what they were pre-COVID. So you can see that curve around end of 2021 and beginning of 2022, they're actually exceeding what their expectations were pre-COVID. Not only that, but they just raised their EBITDA guidance recently. So you can see down here, Uber is now expecting 130 million to 150 million, whereas before it had expected 100 million to 130 million in EBITDA, and this is for the first quarter of 2022, so the quarter that we're currently in right now. Really, all of these things are kind of pointing toward the fact that Uber will very likely be profitable very soon. And once they do that, there could be a switch that flips that basically now they meet all of those boxes and institutions are like, all right, we're ready to go, we're jumping into the stock. And especially, again, if we continue to see the stock drop in the short term and we get value investors jumping into the stock, we could see a lot of people jumping into the stock and we could see a big rally in Uber stock once they get that profitability going, which it seems like is going to happen very soon. So that is kind of my take on Uber stock. I have been selling puts. I stopped recently because I'm doing a new strategy with TQQQ. If you want to know what I'm doing there, you can check out my other video on that. I'll link it in the info cards above. But to be honest, at this point, if it continues to drop below 29, I'll probably be picking up some shares, maybe even sell some covered calls, sell some more puts, depending on where it goes. It's really looking really tempting to me right now. And so if it continues to drop, I will probably be grabbing some shares. Let me know in the comments below what you think of this analysis. If you are buying Uber, if you currently own Uber, where you think it will go over the short term. Other than that, I will see you guys next time. Have a great day.